So Palmer Square has always viewed CLOs as a very attractive asset class, and I think now more than ever that can be said. If we start at the top of the stack, CLO AAAs are probably one of our favorite relative value plays right now, just given yields are now approaching over 7%, even spreads are in the 200 to 250 range. If we look historically, those spreads are 100 to 150 wider than averages over the past 10 years. And even if you look at CLOs versus IG Corps, you're picking up over 50 basis points a spread at the CLO AAA level versus IG Corps, which if you look since 2008, that basis has been the widest it's ever been. And as we move down the stack, given the recent widening in CLO BBBs and BBs, for total return investors, we think right now the entry point is very, very attractive. CLO BBBs are currently trading in the mid 80s, 10% plus yield to maturity. And given the defaults that need to hit BBBs and even BBs, we view, that breaking point as a very high hurdle. Typically to break a CLO BBB, you need 8 to 10% annual defaults for 6+ years. And to get to that level, that's the peak default level we saw in 2008. You would need to see that for 6 years running to break a BBB. So being able to enter into these positions in the mid 80s, we see as very attractive risk reward. Keep in mind for all of CLOs, they're floating on LIBOR. LIBOR right now is around 4.25%. And judging by the forward curve, over the next year, that gets to north of 5% next year. So coupons are rising. You're buying these assets at very deep discounts. And even just the historical performance of CLOs, I think, have been tested time and time again since 2000, going even through the great financial crisis. There's only a handful of CLO BBs that have defaulted. I think the number is about 12 total CUSIPs, over 5,000 CUSIPs that have defaulted within the CLO universe. So, given, Matt, our loan portfolio manager, talked about, the loan fundamentals, even though we do see defaults picking up, we see them going from, 1% now to 3% over the next couple of years. That's still far below the level it takes to break a CLO BB, let alone a BBB CLO. So we think, given the protection that the structures in CLOs give you today and the entry point, CLOs, at these entry points over the past 10 years, it's very rare to be able to buy these securities at these levels and offer a lot of total return going forward.